Market has taken a lump out of your stock this morning, down nearly 6%. Yes, a record profit, but the view is it's going to be rough seas from here. How rough is it going to be? Where will you do battle for business? Good morning. Good afternoon.
Good morning, Manus. Yes, and look, 6% off after probably it was a record profit for the bank. But it's somewhat expected in the sense that the analysts see through now into the 6 months results from ourselves and other banks over the next week, that net interest margin has hit the peak and started to come off. And I think that's what has shown that earnings will be harder to get over the next 6 to 12 months. But the economy is still running pretty well. The bank itself is running well. Every part of our business had increased profits. But yet the market's getting a bit tighter.
Ross, we'll get to the different bits and pieces of the business in a moment, but I want to get to what you're doing in the funding market because you're out and raising capital as well. How are you seeing the bank, getting through this environment amid the crisis that's unfolding offshore, and especially what we heard out of the United States overnight?
Yeah, look, we're in the market at the moment for looking for liquidity. We've got a very, very strong position both in liquidity and in capital. But having put out the results today, our treasury team in the market, it seems to be going very, very well as well. So look, no problem from our perspective on a capital. We've got a range in Australia for us of 11 to 11.5% common equity tier one. We're trading at a 12.21 today. In excess, we've been doing buybacks. We've fulfilled our buyback that we said we'd do, and we've just paused for a period to see what's happening in the economy. But at this stage, is excess capital. We either use it or we give it back to our shareholders. So good there, and good from a liquidity perspective, well over our set limits. And the Australian banking market is still in very good shape. Very strong regulation here. The regulators have not loosened off over the last 5+ years. So, the banks are in pretty strong condition, and we need to be. We've seen some conditions in the US where banks have been found short and the liquidity's run from them. That's certainly not the case here in the Australian marketplace with the majors.
Ross, is there no blowback from SVB, First Republic? We're waiting to hear the very latest now overnight on PacWest. What is the reverberation? Surely you as a CFO must, with the credit committee, be saying, let's tighten up, tighten the ship, and make sure we're a little bit more judicious in the mortgage market, or is that me being presumptive?
Manus, we made those calls 12 months ago, actually on the stability and safety of the bank. We made that as part of our strategic refresh when I first joined the bank 3.5 years ago, that we wanted a stable, solid bank, high levels of capital, and that's what we've got. Our treasury team have made sure we've been very strong on the funding. We've moved our loan-to-deposit ratio from 70% to 80% in the last 3 years. Self-funding ourselves. So the bank has had and taken a very safe and secure position. We're a bank. We're a highly leveraged vehicle, and we need to be safe and secure for our customers. So, look, I'm pleased with the position we find ourselves in today. Today's share price drop was nothing to do with our financial position. It was all to do with margin. And analysts looking forward to the next 6 to 12 months and saying, well, it could be a bit tougher.
Mm-hmm. Ross, we had the RBA decision out a couple of days ago, and I look at the dynamics in the Australian housing market, and I begin to wonder what kind of cracks you're seeing based on some of the feedback that you've gotten from your sources.
Yeah, look, again, 6 months ago, we said to the market, if we ran the business at market share level lower than system, we were comfortable with it. We had plenty of other places to put our liquidity and capital. We've got the biggest business bank here in Australia, and it's going very, very well. We've seen growth in the 6 months just under 4%. The profitability on that business up 14.8%. Nothing, something to really like about it. So that's where our focus has been. We've been focusing on high net worth. We've been focusing on a very small digital bank. We've also been focusing on the sectors that we think the real growth is in for the future. The mortgage market here has tightened up. It's become 50% refinance market. Lots of competition in it, and margins have got squeezed a wee bit. And also on the deposit side of the balance sheet, everyone's competing for it. So NIM is off a little bit. But, you know, we're a very large business bank, and it's proving to be an absolute strength for the National Australia Bank, and it will continue to be so. But look, we've been very cautious in this marketplace. The economy is still running well. Reserve Bank moved another 25 basis points this week, surprised a lot of people. But
can we just jump in on that, Ross, on that surprise move by the RBA? The market's now presuming 4% by the end of the year. Does that break something in the Australian economy? Is it a tolerable? You've seen many cycles. You've lived through them. Surprise move, 4% by the autumn. Does it break or materially impact your business or the economy?
The answer to that is no. The economy needs to slow down a bit. We've got a resource sector going well. We've got an agricultural sector going well. We've got students coming back into the universities, which is a big revenue generator. We've got 300,000 migrants expected into Australia. As I say, what's not to like about this economy? And it needed slowing down. And the Reserve Bank, on its judgment, decided another 25 basis points. It did surprise the market. But we'd been saying this is 3 months ago, there's probably one or two more. Well, we've had one. I think we're getting closer to the top of the cycle. But let's see if there's any more in it. But it's showing a strong economy. And we're just starting to see the weakness in the retail sector, just starting to come off. And the confidence is down, of course, with interest rates going up. But still quite a nice economy to be in.